Ladies and gentlemen, K Kim here. Welcome to the daily update. You guys had a good day trading today. Market is up 1.5% on the S&P here, as you can see. We did see Diamond rallying also today. We also did see the banks up about 1.5%. And so at this point, we'll look at the 65-minute, but there isn't a whole lot of value in analyzing the 65-minute. And ever since we talked about, my oscillator being elevated, this elevation right here, ever since then, this market is performing the unthinkable. We're talking about FOMO, panic buying, melt up occurring here. And when I say melt up, I don't mean like melt up and then a crash, because I still don't believe that crash. When I say crash, I don't mean 5%, 6%. I mean like 30, 40, 20% from here. I don't think we're going to see that. But definitely the elevated oscillator, once we saw that occurring, and it kept happening, right? So you can see, all throughout this entire move since March all the way to, July, we saw the oscillator going back and forth. Again, there's nothing wrong with this oscillator. This oscillator is telling us that something's up. This market is extremely, extremely adamant. And what we also saw was that, it was elevated in this year back in August, early August, and through the mid-August. And so we were elevated for a couple weeks here. And then we came down, and then we found another support here, and then now it's getting elevated up here again. I don't think I've ever seen this happening on my 65-minute oscillator ever. But then again, I don't think we've ever seen this kind of movement in the market, especially the fact that we saw very, very abrupt sell-off, the fastest decline ever recorded in the history of the stock market, which was met by the fastest recovery ever recorded in the history of the stock market, while that pandemic's going on, lowest employment rate ever, horrendous fundamentals with the lockdown, and just, virtually no economy, right? And just so much fear that has been imputed to this market just in March and April, what it felt like, and just seeing this mega FOMO panic buying movement occurring here. I've been trading in over 10 years. I don't think I've seen anything like this. Not after this kind of decline, not like this. I think the last time when I was participating a big move like that was 2017. It's a little bit different scenario what we saw in 2017 though, because 2017 that panic buying FOMO came after a drawn out primary term uptrend, right? That was a 2016 correction. We saw two 15% corrections. We saw 2015, we saw 15% correction. 2016, and we saw this was that 15% correction. And there was a lot of fear also in 2015 and 2016. But market took its time to make its up and down move, and then continue to cultivate higher lows and higher highs. And then all throughout the summer of 2017, market kind of fluctuated up and down, kind of a consolidation, still making move higher. I remember how bearish it was also back in summer of 2017, and then we saw that FOMO panic buying, just vertical move, right? But it didn't start with the correction. It took time to establish that uptrend. And I remember, even back in mid-2017, man, a lot of people were bearish. We're talking some of these guys, I don't know, even on CNBC or even, Twitter with 100,000 followers. A lot of people are bearish. I remember because I was long. I remember I was buying every single dip back in 2017 and 2016. Very bearish throughout. But that FOMO panic buying activities didn't occur until end of 2017, as you can see here. Towards the last part of the move. You see that? The difference today is actually happening right after the steep correction. It's not happening later after the trend has been established. Right now, what's happening right now is we saw steep decline, right? Very, very fast, correction, right? And then we're seeing everything in just one spot. This market isn't taking its time to cultivate an uptrend, going through up and downs, taking its time, maybe a year or two. I mean, while cultivating an uptrend, right? It's pretty much been, it's just been these vertical moves, very, very fast. The reason why this feels like very, very fast move is because how fast things came down, how just the sentiment of what it was like, right? The psychological sentiment of investors and traders, right? I just remember what it felt like back in March lows. Just remember what it felt like in April. Just remember what it felt like in May. But just think about what it feels like now. All of a sudden, this market is invincible. All of a sudden, this market sucked out all the fear, right? Just remember what it was like back in March and April. How many people were tweeting, sharing about COVID stats every single day, talking about COVID stats every day? Isn't that crazy? Nobody's hearing that anymore. It's almost like nobody even cared. And I'm just talking, FinTwit, Twitter, people who talks about the market. I'm sure there's some people who talks about it, but I don't see what's happening there. But I mean, I'm talking about traders and investors who are on Twitter, social media, and talking about the market. And I remember how much people are just every single day, the cases are doubling up. They're sharing that graph. What's going on in Italy? What's going on in China? What's going on in New York City? What's going on now? Like every day it's going higher and higher. Remember that? What happened? Why isn't anybody sharing that anymore? What happened to it? You really think the valuation of this market was this much lower, 35% lower? Because fundamentally that was correct in March. That was fair that we should see something like that. And then 4 or 5 months later, we're at higher than pre-COVID. Do you really think fundamental changes that quickly? Right? Just a couple months later, everything's good now? Like everything's perfect now. We never had COVID. It's just my own opinion. We all got your own way of looking at the market, how you perceive things. I don't really think it mattered from the start of it. Obviously, there were panic and fear because this market moves with supply and demand, fear and greed. So that fear caused this market to plunge that 35% on the S&P that quickly. But I think people started to realize that people just acted emotionally, right? And then they're just coming to their senses. And that's why I think we're seeing what we're seeing today. I mean, just think about it in your own life. Like, have you ever got angry, got mad, maybe you're drunk or you're very, very emotional and you're extremely, it was a very small thing, but for some reason that made you really angry and you said certain things to your friends or someone else that you don't know or your, spouse or something like that. And the next day you woke up and you're sober and then you start thinking about it and you realize you're like embarrassed, right? You're like, why did I even say that? Why was I acting like that? How many times you been through that? I haven't been through it, in my 30s, but in my 20s, I've gone through that a lot. I know. So a lot of people tell me that when they get drunk, like they black out. They don't remember. I remember every single thing. I don't know why. I remember every little thing I said. And I remember I used to I'll get drunk, and the next day I wake up, and first thing I feel is it's just total embarrassment. Like, why did you even say that? Why did you act like that? I was so embarrassed. I didn't know why I was acting like that. Like, we've gone through that. Maybe you're not intoxicated with alcohol. Maybe you're sober, but you're extremely angry, right? And you're really, really angry, and you said certain things to your friends or whatever, right? And then maybe you don't understand that. You're still angry next day, but maybe days go by, weeks go by, maybe even a month go by. And you look back and you realize, why was I so angry? Maybe even a year, I don't know, maybe 4 months, 3 months, right? Maybe 5 months, like about this market, right? From April to now, April, May, June, July, August, right? 5 months, maybe 5 months later, you look back and you realize, why was I even that angry? Why was I so worked up about that? You guys been there, right? I think this is what the market is saying now. Why was I so fearful about what? Why was I acting so emotionally? Right? And then market realizing, going back to history, every single pandemic this market has ever faced, right? And I shared this with you over the weekend. Either it was last weekend or 2 weekends ago. Every single pandemic this market has ever faced, it doesn't matter if it's swine flu, Spanish flu, Ebola, you put every pandemic together, S&P 500 was up positive 6 months later every single time. Every single time. COVID is no different. Right? Though a lot of people thought that COVID is different, but it wasn't. Right? This time isn't different. And I think kind of like market realizing, why did I acted so emotionally in March? And then regretting it, and then market coming back up here. I want to do just a couple things before I let you guys go. First of all, we are hitting this resistance here. I talked about this level probably, I talked about yesterday, we're probably going to slow down here. Well, as of today, as of now, as of this moment, we do not see this market showing any kind of weakness at these levels. We actually even moved higher on my first resistance level. Now we're getting to the second resistance level here. We're just right on it. But there are a few things we can look at I can look at a couple indicators before I let you guys go and kind of gauge how far are we, right? So this is indicator called ADDX. It basically what this indicator does kind of give you idea of momentum, right? That blue, that's the selling pressure. Those are selling pressures, right? So if the selling gets to a certain level, it dies down. So if you look at some of these levels here, so selling pressure, and this was a COVID plunge. So that was a much more selling pressure than any other time. But, if you go back, but look at the buying pressure. This is a buying pressure, that green spikes there. So last time we saw big buying pressure was, remember I just explained how I rolled that 2017, like late 2017 move. Remember that? I talked about that. That's a late 2017, right? So when that rally happened in 2017 that I just explained earlier in this video, that's when we saw the buying pressure get into pretty much all-time high level in like a decade or so. Because you can see that you don't see any green spikes in this vicinity, and it's spiked up here. So if I actually draw a line there, you can see that with this recent rally, we're getting near to that level, but not quite there yet. Obviously, you're not gonna expect this thing to go straight up, peg it perfectly, and that's a resistance. That's not how you see it. the whole idea about these indicators are just you can compare with history. Just like how I've compared coronavirus with any other viruses and pandemics, in the history of stock market, and to figure out how this market reacted 6 months later, right? So this is what this indicator is for, just kind of giving you, okay, so you get a good idea. So you can look like normal times, you can see that my green indicators, if I draw a line here, so you get top here and then loses pressure, buying pressure. It gets near to the level and then it kind of loses buying pressure. It gets that near, doesn't have to go like right at that level, but it gets that near to the level and then it starts to slow down. But then there are a few times where it actually gets a little above it and then starts to slow down. But these are 2 times in the last decade or so when we saw big rallies like this. The last time was late 2017 here, and we're near at that level. So we're getting to that level with the similar buying pressure as to what we saw in 2017. What we did see after that the buying pressure, we did see the market pulling back about 12% abruptly after that. But keep in mind though, 2017 was different scenario. After the late 2017, because the market has been in an uptrend without steep correction for 2 years, since 2016 lows all the way to late 2017. Right now is a different scenario. We already saw 35% correction this year, March, and we're actually after a recovery phase, and then now we're coming out and making new all-time highs. There are 2 different scenarios, right? I want you to keep that in mind. There's one last one I want to talk about before I let you guys go. This is a monthly chart, or daily with the oscillator. So now we're looking at daily oscillator here. So we can see here, if I look at a daily oscillator, I can just draw a line like this. And you can see that there are a few times where we get into that level, right? And again, it just like that 65-minute chart, it could grind sideways also. So this isn't where, okay, we hit that level, that thing's gonna come down. That's not how you're gonna see it. But there are a few times where this thing does get into that level. I'm just kind of highlighting times where it did. There's bearish divergence here, higher highs, higher lows. That's a 2017 right there. 2017 right there. And see this right here. October 2017, we hit that overbought just like it's hitting today. This thing kept going higher. You see that? So 2017, October for 3 months, October, November, December, 3 months. After hitting the all-time or that overbought level, we were elevated. We've been talking about this in a 65-minute chart, right? Elevation there, and the market kept moving higher. So you see, is there a chance that we could actually keep being elevated here? Yeah, this is what I'm saying. That's the thing. It's most extremely difficult to call top in a rising market. It's actually easier to call bottom in a primary secular bull market, because when you look at these lows, right, what am I actually telling me? Extreme levels. We never seen this market coming down this level or this level, right? Only time it did was 2018 and then the 2020 March, not other times. But when it's at overbought level, however, we hit that many times. It's so difficult. So difficult to find where the top is, because there's sometimes we hit that overbought, we keep moving higher. But there's sometimes we hit it, it does tank. So how are you going to know which one's which? We can't. But it's easier to find out where the potential lows are, because you get into we've never been at this level here. I'll draw the line. Look at that. We never been at this level ever. And then ever since the next thing was here. So you see how it's easier. It would be, because when you look at these maximum levels, because even these intermediate term lows, they don't do these elevations. You see that? They don't have these elevations at the bottom of this band. Usually they hit and they bounce. They hit, they bounce. They hit, they bounce. They hit, they bounce. So you can kind of, it's easier. Doesn't mean it's easy to call bottom, but it's much easier if you understand the secular bull market, if you understand we're on a primary term uptrend, because in a secular bear market, you're gonna look at this upside down. You're gonna see these grind bottom here. But anyhow, so you see, much easier to call bottoms, right? Because they usually tend to, when they cross, they usually stay up, they goes all the way back up. But calling top is difficult because of these elevations, right? Because of these, they can't, right here, man, look at that. Right here, hit that overbought, that thing kept moving higher for months. When was that? October. That's what? October, November, December, January. That's 5 months bullish run after hitting the overbought. So we are hitting the overbought. Very difficult. Because it could come down a little bit and then keep doing this for months. Who knows? You see what I mean? That's why it's extremely difficult to call top versus calling bottom. It's easier. Doesn't mean it's easy, but it's easier calling bottom if you understand primary term uptrend. So what's my overall thought going into tomorrow? As I've been saying this entire time, that I want to continue to give benefit of the doubt to the buyers, right? And I talked about how you should manage your portfolio in this kind of environment. It's you can close out some of your longs that has yielded good gains, but always hold some also so you can keep riding it, right? And I've been long on index funds since April lows and added in June lows, and have not. And those index fund I got into. When I say index fund, I got into long shares on all the indices, S&P, but most heavily weighted on the S&P, Nasdaq, and semiconductor. And those I will not be closing out. They are for very, very long term. Also, I own many equity shares, right? And I have plenty of equity shares I'm still holding. I actually been a long-term investor since 2016 lows. So there are a lot of stocks that I'm still holding, such as Google, right? Such as FedEx, right? Such as Alibaba, right? Qualcomm is another one that I've been an investor for many years. I'm holding full on those, but I've closed out my Apple shares. I've closed out my Squares and low share. And I talked about this because they just went straight up, but they yielded great gain, like 150%, 140%, because I bought those in March lows. So what I did was the stocks that just went straight up vertically, I closed them out. Stocks that were more conservative, like Google, I held. Though Google's been moving up recently this week, but I'm still holding full there. And then all the most exotics are gone. I'm still holding some call options, here and there, and some of the equities and some of the indices. But most of the exotics are gone, right? We're talking call options. We're talking triple shares. I'm holding double shares on the S&P and Dow and the Russell, I believe. I'm still holding double shares on those. And so as the market started getting into extended sessions, that's what I was doing. Getting rid of those aggressive positions, getting rid of some, and to locking in gain, to get rid of those stocks that yielded good gains, that made just vertical up move, right? But I still had held many of the stocks because I see some of the stocks being lagging start coming up now. A lot of stocks that were lagging, like I saw Starbucks moving up recently. I saw because I own Berkshire, I own Starbucks, I own Disney, I own Boston Scientific. All of those stocks, including FedEx, they all start coming up later. When Apple, Square, Lowe's, Netflix, when they all made a move, which I closed out all of them, when they all made a move, Starbucks, Disney, Berkshire, Boston Scientific, like maybe Visa, MasterCard was lagging a little bit. But I'm still holding full on those. I'm holding full on Visa. I'm still holding full on MasterCard, right? Funny thing was, I did put on some shorts on VIXs. I had calls on VIX, VXX, UVXY, and VIX since since last week. they've been going up, And so they were hedges, and I was actually looking for, I don't mind, and those are VIX calls way out of the money, like October expire, October, November, December expire. And I started accumulating actually here, and then I bought more here, and then I bought more here, and then I bought more here. And they were obviously there to protect my long should if there's any kind of a steep decline in the market. Market goes up and VIX goes up, so I end up making money on VIX also because I was ready. I actually wanted the market to keep moving higher, because I'm still very much involved on the long side, a lot of my long-term positions. And so when I got into those VIXs, I knew that I'll make more money if the market would kept going higher, right? But just in case market would see any kind of abrupt sell-off, I would have a VIX, not to cover my entire portfolio, no. So that I would have VIX, so let's say market comes down, VIX shoots up, I make, I don't know, 200, 300, 400, 500% on those call options. I can close out those options, make some money off of that, and then start buying the dips on some of the equities, indices, stuff like that. And that was my plan. But I don't mind it. Spider's been going up, VIX been going up. I shared this chart here on Twitter. I'll share that with you real quick before you know what? Actually, I have it right here. I produced that chart on my charting software. Okay, so you can see here, right? So this is the gray candles. That's the VIX, and this is a VXX, and the green is a spider. You can see last 10 days. You know they have you know, inverse relationship, right? Market goes higher, VIX comes down. Market goes lower, VIX goes higher, and that's traditionally what happens here. But sometime in August 19th, something happened here, and you can see overall sense in the last 10 trading days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. So 10 trading days, which is 2 weeks. You can see that essentially they've been moving higher together. I don't think I've ever seen anything like this. Some people told me that they saw something like this in 2017, late 2017. I actually went back and checked. It wasn't like this smooth. It wasn't. This is like every single day up together every day for 10 days. It wasn't like this. It was more like, you know, like this. Like they still had an inverse relationship, but like VIX kind of did this and started going higher like that. Not like this every single day type of thing. Like, I mean, clearly this day market was up. That's clear. That's a green candle, clearly. And VIX is green also. Clearly green candle, green also. Clearly green candle, green also. Right? Nothing like this. I mean, I've been trading over 11 years, and I don't think I've ever seen something like that. I mean, you see day or two where you see VIX going up and S&P going up, and usually they get reset pretty quickly. This is the first time so we're seeing all kinds of strange things happening. And this is part of the market you have to understand. These strange things is happening. You know, everybody's just like freaking out. Oh my God, why is this happening? This has never happened. You know what I mean? This is the market. This market always evolve. So you have to evolve with it. That's the reason why trading in the market is the most difficult endeavor, the most difficult vocation you're ever going to, you know, be participating on. Because this market continues to evolve. Just because your certain strategy worked before doesn't mean it's going to work now. This is a reason why I think so many quote-unquote experts, right, who's been around, I don't know, 30 years, 40 years, 50 years, right? They're having a hard time trying to figure out why this happened. Because most of those boomers, those expert boomers, they were bearish throughout this entire move. They're fearful that this is going to lead into bear market after, you know, the bullish rally this entire time, last several months, right? They're talking about 1929, they're talking about 2000s or 2008, but they're completely wrong because this market evolves. The certain things that worked before, it may not work. So you have to constantly adjust, evolve, adapt with the market. Remember what I said before. I'm going to let you guys go with this. Remember what I said before. Your job, Our job is not to try to figure out why, how. That's not our job. Why is this happening? How can this be possible? The market fair valuation is 180 on Spider. This should not be up here. It's all because of the Fed. That's not your job because you don't get paid doing that. Let somebody else try to, figure that out, why and how, and, explain whatever. Your job is to ask this question: how can I benefit? How could I have profited from this move? Maybe you missed it, but you tell yourself, okay, next time, if we do see up, because the market will give us another pullback. We just don't know when. It will. And you ask yourself, okay, how can I profit from the next move? That should be the right question you should be asking yourself and continuing to develop that strategy, right? Where should be my entry point? Where's my exit point? What kind of strategy am I going to use, right? Versus why it shouldn't be up here. This is all a dream. This is all rigged. This is all Ponzi scheme. Every single day you yell that, you're not getting paid. That's the wrong question. Why, how, explaining, or fair, quote unquote, fair value. It's just all dreams, man. Think about where the Tesla is. You don't talk about fair valuation on Tesla, right? And then people say things, well, yeah, that thing is going to crash. Maybe so. But think about people who actually gotten up there. Obviously, I'm not going to be chasing Tesla up here. I actually missed out this entire move on Tesla because I didn't understand it. I never understood why Tesla, and it just wasn't even part of my strategy anyway, so I completely missed out on Tesla. And I'm totally cool with that because there are plenty of penny stocks out there do what the Tesla does. But let's say those people who made money on that move because they went long at maybe 500 or 400, right? I'm talking about before the split. Let's say they went long, March after the COVID thing. Maybe they went long last year and they held it. Well, they're greatly benefiting from it. They're not asking questions. How could this be? This is fraud. Nobody. They're not mad. They're not mad, right? And they start pulling out, and that's what I would advise you to do. I think that's what I would do if I was long on Tesla March lows or last year. And then I'm up like 150, 200, 300%, I'll close out minimum 50 to 80% and lock in that gain. And then I'll keep 30% just so if you keep going higher, I'll just keep riding it. I'm not going to be asking questions why or how. How could Tesla market cap is now higher than Walmart? It's absurd. Nobody gets paid. How can Elon Musk is now more wealthier than Warren Buffett? That's absurd. I'm not going to be asking that question because my job is benefit from the move. So you guys been asking the wrong question. You trying to sound smart on social media is not going to get you paid. You sound smart in front of your friends or family member trying to explain every single thing of why this market shouldn't be up here. It's not going to get you paid. Your job is to make sound decision and execute that trade and profit from that trade, right? So I actually didn't mean to make this video long. I've tried to make these daily videos under 10 minutes, but with the special circumstances that we're in, it just came out. Maybe this weekend video will be shorter. We'll see, but enjoy your evening. Good luck trading tomorrow. I'll come back. We'll go from there.